Hey guys, it's Mickayla Fatovic with eXp Realty. I wanted to make a quick video just to kind of go over what I think is going to be happening in the real estate market right now. As a lot of you may know, I am a specialist in investments. I specialize in these smaller forms of residential investments. So basically anything that has to do with a tenant and a landlord, it's my forte. I do up to, 10 plus units. So there's just like a quick little background on me. With this market, it's not sustainable at all. And if you've probably already searched into Google, when is the real estate market going to crash? Because I know I have a million times, and I already know it's going to end up having a crash or a correction, but I don't think that's going to happen for another 18 months potentially. And that's just basically comparing it back to like when the early 2000s market crash happened. And even like, I think it was like in the 70s or like in early 1900s, I think there was one or two crashes. But when you're comparing them side by side, there's a lot of similarities. And I know people are like, there's no similarities to like the early 2000s whatsoever, but there really is. If you pay attention to what's going on in like China, for example, China has a crash potentially coming with one of their like biggest developers because they can't keep up with their debts that they have, and it's just crazy. So if the biggest developer in China is just like goes under and the government doesn't step in as much to really kind of like, chill the situation out, then China's real estate market could potentially just go under, right? And if you pay attention to the early 2000s market crash, what happened in, those times? Chinese market crashed, okay? So we're really trying to pay attention to like what's going on in China just because of the fact that in the early 2000s, that also happened. And history is known to repeat itself as much as we don't want to admit it. It happens. So we're paying attention to that. We've already seen lumber prices go up and down. And in the early 2000s, we are also watching lumber prices go up and down. And right now, we're going down again with the lumber prices, right? We've been already on a steady decline, and this has been for a couple months now. If you've been paying attention to the lumber prices because you work in like development, then you already know what I'm talking about. But overall, there's going to be a correction or even potentially a crash. I don't know how bad it's going to be, but it's impending. And it's so difficult because a lot of us right now, all of our investors, we're sitting here and we're trying to make the smartest purchase decision, and we're going into this, with the attitudes of a lower purchase price is a lower risk, and basically our budgets we've set to like the lower 200s to below, and that's like on a scale of multiple investors and multiple, people going in, so we're not using mortgages because mortgages are a liability within themselves, and if there's a market crash we don't want to be attached to a mortgage because we don't know how much of a decline we're going to see in rents and the equity or anything, and we just don't want to be tied to a mortgage. Now, other people see it differently. Some people are okay with the mortgage. They see it as, oh, well, I have less money, and so it's okay. Well, I see it as I have a higher operating expense. So I don't want a higher operating expense during a crash. I want a lower operating expense. I want all my operating expenses to go really, really low, because if they're really low, then I have to do less in order to make it a profit. Now, if I have a mortgage that's like $900, right, and then all of a sudden the rents drop and my investment is now only bringing in 1,000, and I have two partners involved, we're only making like $50 each, you know what I'm saying? And it's just like, what's going on? And then we don't have any room for error. Like, that's one of the reasons that was a really bad example, just so like we're clear. But that was just like a quick example on what I'm meaning. Like, and rents could drop that low. Let's say that you bought a $200,000 property and all of a sudden, your rents were around 2,000. We see a massive crash. They could go down to 1,000. We don't have any control. Like, there is no control here, okay? Properties could potentially go down to what they were in '08, and or they could not. This is all like just a speculation, and we have this gut feeling that it's going to happen. We don't know when, we don't know how, and it's driving us absolutely mad. So we have to keep reminding ourselves to not go into the market and try to read the market as much because we're literally like we're going insane with it. Prices are just absolutely absurd right now. And the buyers that are in the market right now are not the buyers that were in the market last year. So last year we really saw an incline in home buyers like just going at it with one another, and we're still kind of seeing that still today, and I'm in the Florida market, but we're not seeing it as much. Like the bidding wars are not as drastic. The bids are not as crazy. I'm kind of seeing it back to a little bit normal in a sense because the properties that are overpriced are no longer getting offers, and the offers that they are getting are very within reason of the actual market value. It's just sellers are being greedy. And oh my goodness, there's this YouTube guy, I can't remember his name, but I watch his videos. I'm going to tag him in the description below or attached to this video somewhere. Um, and he was like, he had this amazing story about tulips, right? This like tulip market, and he explains it very well. So you're gonna have to go check him out, just because like his explanation on basically what's happening in all of the markets in all of our economies is attached to that story. It's like a more older, non-modern story, which is really, really awesome. And basically, long story short, these people they went and they wanted tulips in their gardens, and like it just the prices of tulips skyrocketed because so many people wanted tulips in their garden, and then the investors got a hold of them. They started being greedy, and then nobody would buy them, and then the market crashed for the tulips. And like that's just kind of like what we're seeing with the real estate market. And again, that story I got from another YouTuber, but again, go check him out because he's very smart. Um, but I mean, other than that, the best thing that you can do is attach your funds to an asset. Because if you're not attaching your funds to an asset, then you have a liability. And if you have a liability, you're in for a hell of a ride. So, yeah, just avoid the liabilities. Go for your assets. Make your assets into something that has room for error. Make sure that your numbers have a lot of room. Like, that's one of the reasons why I don't want mortgages attached to any of my properties right now, except for like the ones that I really that their equity is already skyrocketed, and it's when we already have enough room. If that makes sense. But we don't want mortgages attached because of the fact that there is a crash and then the rents go down. We don't want to end up in the situation where we're negative. We want to make sure that no matter what happens, no matter if there's a correction, a crash, whatever, in the next 18 months, then we are able to keep profiting because we need to be able to keep functioning. We have very creative types of investments. It's not just your traditional rental where, you have a tenant and their family within a house and then you're collecting rent. Like we have those, but we also have very creative forms of like more community types of housing, and we need to adjust the affordability of those accordingly, or we end up negative and then it closes and then we're in, the issue that so many homeowners are in right now. So my tip for this market right now is take it with a grain of salt. Don't obsess or stress. I know it's very difficult because if you're in the market as much as I am, you're going to be stressing out. You're going to be very, very, very overwhelmed because it's just very difficult to keep moving forward when you know that there could be a crash on the horizon, and prices are just not reasonable. But then again, if you're planning to have a holding property for, 10, 20 years, what's it really matter if there's a crash in the next 2 years? Because you're still going to have the property through that crash, right? So by freaking 10 to 20 years, there might need be a new bubble. The history repeats itself. So that's kind of like how I'm seeing it. So I'm going in with holdings. I'm going in with room for error. I'm going in with low operating expenses. I want my operating expenses very low. I want my liabilities very low. And wherever possible, I'm connecting to my other cash investors, my other cash partners. We're all trying to go in together so we don't have interest on top of our assets. We are just really working together as teams right now. And that is the best thing I could recommend for any investor right now is just to go into the market, working with the team, try to stay away from private money because if the market crashes quicker than we're aware of, then you're stuck with like anywhere from 6 to 15% interest, and you don't want that in a market crash because then you're overpaying and you're overpaying. So yeah, that's really all I have. Uh, the market is definitely going to end up having some changes very, very soon. We're keeping an eye on the stock markets. We're keeping an eye on the Chinese development King Kong over there. I think it's called Evergrande. And we're just really paying attention to a lot of moving parts because if you go back to 2000s, the early 2000s, you're going to see that there was also a market crash in China. You're also going to see that there was the lumber prices. You're going to see so much similarities to today that it's going to kind of be like a little bit concerning. So like take it as you may, be prepared for the worst, go in with the plan of lower operating expenses and just keep trudging forward. I wouldn't, this like right now would not be the time to go and make a risky purchase just because. So the lower the risk, the better because we're in such very confusing times. I don't recommend going in and spending all of your money in one property. I don't recommend going in and just taking on the most difficult property in the world because you again don't want all your money in. You don't want all your partner's money in because if there is a crash, there is a correction, you want to be prepared for that because then that's going to be the best time for you to buy. Just like in the stock market, you wait for it to go down, not up. So if you're getting good deals right now that are literally within reason, you know, then go for them. But if you're looking at like houses that are going to be in bid wars and houses that are like just very like, you know, not within reason financially, stay the hell away from them because they're not a good choice in this market at all, even if you're a home buyer. This video is mainly for investors, but even if you're a home buyer, just stay away from the houses that are like super pristine, super overpriced, like just don't do them. And if you're going after them, make a reasonable offer. Like, I cannot stress enough how much it is important to go into these markets and lowball. And I mean, don't lowball in the sense of non-reality. Lowball in the sense of realism. Because when you are a buyer and you're going in, you're like, oh yeah, I'll pay $50,000 over asking. You're you're still keeping that market going like chugga 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 choo choo. But if you're going into the market and everyone who's a buyer is going into the market going at a lower price, not willing to budge as much, and they're holding their grounds more, you can just change some terms in there and make it work for you. But if you're going in and making it higher, 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 you're not helping the market. You're making it worse. You're making it more unaffordable. You're making it unrealistic. You're basically doing what Zillow is, and they're losing a lot of money right now. If you follow Zillow's little thing they got going on, they're losing a lot of money doing that. So I don't recommend doing it. But you know, don't be afraid to lowball. Do not be afraid of lowball. Lowball, ask for repairs, get credits. If you're working with an agent and your agent says, "Oh, we're not going to ask for a credit," like get a new agent, fire that agent on site and get a new agent. Like tell them, "I don't want to work with you anymore and get somebody else because I'm an agent in Florida and I'm telling you, I've gotten thousands of dollars worth of credits back before we close, enough that we were able to make all of the repairs and plus profit some." And it's possible in the seller's market, and you just have to be willing to ask. It's the power of the ask, not booty, but ask. Okay. And that is really just it. If you are willing to ask people, hey, I'll give you 155 on your 175 house, they'll go back and forth with you if they haven't gotten any interest. And then from there, you go into your inspection and you do what? Okay, following me? So you just like, if you're gonna be smart in your investments, just ask. What are they gonna say? The worst they're gonna say is no. And like you're doing everybody a favor because you're talking down, you're talking it within reason. But the more people are like, I am gonna go into this market that is very, very non-stable and offer 50,000 over asking, the more issues we're running into, the more problems we're having, the more crisis we're seeing with affordable housing. And like that's not good even for investors because then we're overpaying and then the tenants have to end up overpaying. And it's like just a waterfall trickling down over the pyramid. Like it's just it doesn't work. So stop overbidding, stop putting yourselves into bid wars unless it's like a freaking amazing deal, and just really expand your room for error right now. The more room you have when going into an investment, the better it is. The more profits you can gain, the more help you have if something changes drastically to be able to self-correct. And that's all you need to worry about is your risk, your numbers, and your reason. If you have those three things in place, you're going to do fantastic. Even if the market crashes, you're not going to be affected because you're already going to be preparing for the worst. And you'll be able to keep moving forward into the next market that comes our way that's probably going to end up stabilizing itself and then going a little bit crazy again because that's just what markets do. If you watch and invest in the stock market, then you know that, ups and downs are a part of the markets. It's just what it is. So with that being said, I hope this video was helpful for you guys, and I really appreciate you watching and supporting me. If you've watched this video all the way through, I give you props and thank you. You're my favorite. And please, please go ahead and smash the like button, subscribe, follow. And I hope to connect if you guys need help with your investments, really looking over a deal, seeing if it would financially make sense for you. My phone number is 201-952-4665. You can give me a call any day, any night, and I will help. Don't call me after 9 because that's weird. But anyways, I'll help you guys. I'll help you guys look at your deal and see if it's actually within reason. And if it is, I'll give you guys a thumbs up. I have no interest in any deal that is outside of my parameters, which right now is Brevard County. If you're in Brevard County, you want to invest, you need a partner, message me, call me, text me at a reasonable time, and I will be happy to help you guys. But from there, I wish you guys the best. Keep your heads up. And I think, yeah, Halloween's almost here. I've been drinking pumpkin spice stuff already, and I feel that I am already on my level of Halloween prepared. Even though we don't have fall in Florida, I'm prepping. I am prepping. But yeah, bye guys. Thank you.